Welcome once again to Let's Talk Money with Mark Provenzano. He is one of the co-founders of Hedged Private Wealth right here in Louisiana. I'm your host, Spike Spangle. Mark, how are you doing this week?
I'm doing absolutely just fine. How about yourself?
Very good, very good. I'm doing a lot better than the markets are doing right now, and certainly better than inflation is doing right now. We have a very, very compelling program on retirement planning that we're going to talk about today, the kinds of biases that get in the way. Because what we're doing right now is a lot of Americans are reacting emotionally to the markets. I'm not saying it's your fault, but there's a lot of fear, there's a lot of worry. The other flip side of that is even the greed, you know, when we're chasing after high returns. And when it comes to investment decisions, I have to say that it's human beings that are making decisions. And it's these human elements that ironically make us, unfortunately, make huge mistakes when it comes to our investing. So today we're going to talk about biases.
Without a doubt. And you know, biases can really, really hurt a portfolio, Spike.
Oh, sure.
And why? The herding bias, right? Let's take them one of the most simplest. The herding bias, folks, is when you hear about it talked on the street, you hear about it at the coffee shops, you hear it about the barbershops, and all of a sudden you find yourself doing what everyone else is doing. You're following the herd, right? That's very, very, usually, honestly, when it comes to the news, any type of information spike, and you know this, you've been in this all your life, once the channels get it, it's too late. It's too late to do anything. It's too late.
Exactly.
It's too late.
It came from somewhere.
Yeah, exactly. It's too late. And the herding biases, I have a good story as we move on about that. And
so it's kind of a baseline on it. It's an irrational belief or thought process or irrational analysis that we know better than what's going to happen next. It's letting our emotions. And one of the best ways it was ever explained to me, if you go into the emergency room and you fell down, your arm is all bloody, you know, you're freaking out. Maybe your spouse or partner is freaking out too. You're like, oh my God, get the doctor, get the doctor. Okay, when the doctor comes in, does the doctor go, oh my gosh, that looks terrible. Hurry up, call somebody. No,
no.
The doctor comes in,
and
they're very methodical about what's going on. They're looking to solve the problem. And that's what you try to do at Hedged Private Wealth, is that a lot of folks are obviously very emotional about their financial decisions. Rightfully so. We completely understand. But what your job is to not have your emotions. I'm not saying not have empathy and understanding for what's going on, but you somehow take your emotions out. Is that because you're looking more at the math and the numbers?
Thank you for that. You know, your definition, right, of the bias. I like to say it's built on math and science, okay? The bias is not built on that. It's an irrational belief, okay? So, yes, and that's called a plan, Spike. If you have a plan, we're already prepared. We're already prepared for what's going to come our way. Now, not to say we have everything figured out, but it's much easier to adjust than to totally redo, right? So yes, biases, they can realistically put a big hurting on your portfolio if you tend to follow them. And really, that's when our clients come in and we talk about it, we get that up front. We already ask the questions, Spike. We are already preemptively looking for the biases. We ask pointed questions. How do you feel about this? How do you feel about that? So we have already qualified like 4 or 5 of the biggest ones. So we've taken care of 90%, right? And that's what we're trying to do in a very short period of time. Once we get those under control, we already know you. We know what we're looking for.
How is it that you are able to stay objective yourself? Because one thing that we talk about in this program, we know that politics are out there.
Oh, yes.
But we don't necessarily discuss the politics. We are aware of what's going on, but we try to focus on the folks out there, their goals, their needs, their objectives. When a law changes, you do what's appropriate for that. But we try not to get into the speculation of how is it that you're able to remain objective. I'm sure you have to have your own personal feelings about things like legislative risk and tax risk that are out there. How can you remain objective about portfolio management?
You know, just what you had mentioned about the physician, right? The physician has to be composed, right? We have to be composed. We cannot implement or put our feelings into it. Why? Because when that client first came in, we've already went through the discussion. We've already asked the hard questions. So we already know what we're dealing with. And if we're dealing with someone that really wants to go to Vegas with their retirement, we understand that. And if that's what you want to do, we're not going to, we're going to guard against it. But if that's what an individual wants to do, we can do that.
Right.
But no, there are implementations that are put in place through a good, solid financial plan.
But if somebody has, let's just say political opinions about things,
Yes.
you're mindful of that, and you can say, look, I will make that apply as much as I possibly can in the portfolio, as much as it makes sense for your retirement.
Oh, of course. Of
Right,
course.
'cause we've got to at least be mindful of,
Oh,
but
of
you try to
course.
remain as objective as you possibly can. So objectively, tell me exactly what a portfolio review is, because you're going to be looking at the health of somebody's portfolio, their tax situation. What exactly goes into that?
Absolutely. And being a degreed accountant, I always like to tell you, and I'm sure I've told you this so many times, but it's all about math and science to me. And that's the easy part for us back at Hedge Private Wealth. The more important part is getting to know you. Getting to know you, viewers. We must know you and your wants and your desires and your dreams. What do you want your money to do for you? It's not about us. So once we get that key component down, because that really is the key component, we can't just say everything is math and science. However, it's a big part.
Lot of it.
It's a big
is
part. It's a
lot
big
of it.
part. So yes, it's about our viewers. It's all about our viewers. And that's all we ask is honesty, because you're going to get honesty and integrity from us, folks. We just need you to be honest with us. Tell us your political views, like Spike mentioned. We're fine with it. It's okay. You're political, you're religious. We're fine with all of that. We just need to know, how can we help you? What do you want your money to do? Then we implement that for you.
Absolutely. We're going to take a very short break. We're going to continue to talk about biases right now that could be hurting your own returns. There is academic study after study after study. These biases are real. You can look it up. You can Google it right now. Behavioral finance. 6 decades worth of Nobel Prize winning academic research that shows we have emotional biases that get in the way of sound decision making. What you need is a financial advisor who can be objective for you, help you accomplish your goals and dreams no matter what your opinions are. But you need somebody who can objectively look at your goals and objectives and what your investment strategy is. Call Mark right here to have him do that for you and get your own complimentary review. 888-339-2048. More with Mark Provenzano and Let's Talk Money, your money and retirement, right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go? And who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Thank you so much for coming back to Let's Talk Money with Mark Provenzano, one of the co-founders of Hedged Private Wealth right here in Louisiana. I'm your host, Spike Spangle. If you would like your own complimentary review, just like the commercial was saying, give us a call right here, 888-339-2048, and Mark will objectively take a look at your retirement planning strategy or whether you actually have one at all. One of the reasons I say that is because we're talking today about biases, and our emotional biases are proven. There is just tons of decades worth of Nobel Prize winning research that show we have these biases within us. It's our fight or flight that has been literally ingrained into our brains, and when the markets are scary, we want to run from them, and it's totally understandable. But investment-wise, that could be absolutely the wrong decision to make. So one of the things I wanted to ask you about, so I've got a list of a few of them here. Maybe you could tell us from client stories or experiences or people experiences how these things may have helped or hurt them. Confirmation bias. What exactly is confirmation bias?
Confirmation bias, that is wanting to follow, just wanting to follow. Confirmation, you confirm it yourself, right? You've made a decision, you confirmed it. You seek all the information that confirms what you've studied, right? That can really hurt you.
Because you don't search out the other things that might
Nothing
be
negative.
the contrarian.
Yeah, that's correct, good word, contrary. I didn't want to use it. You
And
used it.
I hate to say that, but of course I did speech and debate when I was in high school and in college.
can see.
And that was part of it, though, is you had to understand the other side
Yes.
to be able to understand your side even better. But sometimes the illumination that you would get from, you go, hey, you know what? I really didn't think about this point. But what we all tend to do, all of us as human beings, is look for what is going to confirm what we already believe. And when you do that in investing, how does that work out?
Well, I have a story, if you don't mind me sharing.
Please. It's your program, Mark.
Okay, thank you. It's, unfortunately, it's not going to be a happy story, but we all learn from it, okay? And I'll never forget, it was 2006, and I went over to a prospective client's home. And he had a very, very nice, bigger than 8.5 by 11 folder from guess whom in Texas, Alan Stanford. Remember the Stanford scam?
Yes. Well, I remember
billion?
it, but maybe you explain a little bit for our viewers.
Yes, that's a gentleman. He
We all know the Bernie Madoff
He was
name.
right behind Madoff.
Okay.
Madoff went, and then he came. And he basically scammed $8 billion of investors' money, which was detrimental because it just so happened that I was in the home of one individual who he was on a fence. He was asking me my opinion. So we sat there, we had coffee. I read the whole entire beautiful. I mean, the marketing piece must have been $75. It had to be. It was beautiful, paper mache. So I read it all. When I was finished, I gave it back to him. I said, it's beautiful. Whoever put it together, man, they're the top in the industry. But I wouldn't put my money with them. This was in 2006. And he asked me, well, what do you mean? All of my rich friends, they're waiting to see what I'm going to do. They all want to put money in millions and millions and millions. And I said, there is no CD out here that's going to pay you 7.5% coupon. This was not in the day. This just wasn't. There was nothing to back anything up. There was no type of back reports like we look for, right? None of that, none of the back-end information that we as registered investment advisors look for. Couldn't even present it. I don't even know how the gentleman got this far in the industry, but he did. So my prospective client went ahead and invested.
Oh, no.
He lost 90% of his retirement. And I'll never forget the day. I think it was February 14th of 10th of 2009. I'm an active trader. I was trading my money. And I saw across the ticker, Alan Stanford, receivership. I saw receivership, okay? FBI, it's in receivership. I immediately called the gentleman up. I said, I hate to tell you this. Did you see it? He goes, yes, I saw. He was very upset. I felt very bad for him. And I said, you're not going to get your money. I'm going to give it to you now. You're not going to see your money. He's like, what do you mean? Yeah, what do you mean? I said, receivership, the assets will be gone. The billions that he had, there'll be nothing left once the FBI, they go through the courts and they try and find
taxes, because clearly it wasn't paying taxes or anything. It'll be totally gone.
Sure enough, folks, you know the story on that. Hopefully you weren't invested in that, but Yeah.
Yeah, and in part,
Yeah.
as we're saying, confirmation bias.
Confirmation.
He wanted to believe it.
And hurting.
And the other one that we'll always say, there's two things usually that drive investors on the answer when we're going by our emotions. It's either fear or greed.
Yes.
Fear or greed. It's
Yes.
just one of those two.
Yes.
Fear, totally understand. Let's get out of the markets. It's crazy right now. Greed, we're thinking, oh my gosh, well look at it says I'm going to make this much money. It says I'm going to do this. And when it sounds too good to be true,
It usually is.
it usually is too good to be
And
true.
I've seen my fair amount. That's just one story. I've seen my fair amount of this, and very,
Can I
very
ask,
unfortunate.
just
Yes.
on top of that, because sometimes I would say certain annuities that you talk about almost sound too good to be true. What is the difference, though, with this? Because is it a difference because they're backed by large insurance companies and you can do
Absolutely.
all of that back testing and you
Absolutely.
can look at the bottom line of an insurance company and the payout and the amount of because I mean
Absolutely.
somebody can print out 7.5% safe and so forth, but how do you look at a company to know that you can count on it?
Spike, our firm only deals with big, strong companies, usually A+, A++ superior, A. That's who we deal with. These companies have been around for 121 years. So if they've been doing something wrong, don't you think from my auditing background, it would have been found by now? Sure, it would have came out, because the scam always comes out, right? So big, strong companies, there's so many different types of annuities, and that's why, folks, you align yourself with a good advisor, you get your fixed expenses in line monthly, you take care of that pre-need, and if you don't come to us, go to another fiduciary and ask them that. It is a task now, I will tell you that. We do that for our viewers. It is a task because we have to know exactly what they want their money to do. Then we bullseye in on that. We've got a plethora of companies we go through. We know the ratings. We know what each one of these companies has, probably 8, 10 different products.
Yeah.
Not every product is good for you. We have to know what's good for you. And then we implement. Very simple.
Right.
It's very simple.
Go to a fiduciary.
Yes.
But then the second part of it, because this person did go to a fiduciary, then listen to that fiduciary who says,
Yes.
this does not look like it's healthy for you. Folks, we have to take a very short break right now. If you would like your own complimentary review on an investment strategy, maybe somebody else is talking to you about, that's totally fine. We understand, just like going to a doctor, you want to get a second opinion, you want to get a third opinion, find out what's right for you. Make sure you're going to a fiduciary who will have your best interests in mind. Don't have overconfidence in something because it sounds too good to be true. It probably is when it comes to the investment world. Make sure it's a company that has ratings, that has history that you can look into, and more importantly, work with an advisor who has your best interest in mind. We're going to continue to talk about our own human biases that get in the way of our investing when we get back. More Let's Talk Money with Mark Provenzano, but call and ask for your own complimentary review. 888-339-2048. We'll be right back after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Let's Talk Money with Mark Provenzano. He is one of the co-founders of Hedged Private Wealth right here in Louisiana. I'm your host, Spike Spangle. If you'd like your own complimentary review on your portfolio, your investments, your retirement strategy, call the phone number you see right here, 888-339-2048. There is no cost, there is no obligation to it. We're talking about biases that get in the way of our own investment success. And one of them, overconfidence bias. You see a lot of this in Wall Street. There's a lot of overconfidence.
Oh, yes.
But if you don't mind, if you could talk more on a personal level, clients, folks that you've worked with, what does overconfidence look like to you?
Well, let me use a short example for you, right? I have a client worth pretty substantial, okay, and deep in 7 figures, and he called me up for a recommendation on going short a stock. And I said,
Okay, so we're playing options here.
Yes,
Okay,
going
all right.
short.
So he's pretty sure this thing is
Yes,
going down.
yes.
I want to play the market.
Yes, he wanted to buy a put. So I said, if you want to do it, we can, but I don't agree. I tend to differ drastically. I said, I'll have you something by tomorrow before the market opens. So I got him a little small report, okay, what I just penciled together from what I know from all of our, with all the different risk realizers or everything we have, right? Bloomberg. So I gave it to him, and he was just overconfident. He did his own research. He just knew the stock was going to go down. He just absolutely knew it. And I'm going to play devil's advocate here. I said, you know what? I'm going to buy a call. You're going to go short, I'm going long. I did it. And I did it. And he lost, and I made considerable. And I said, I tried to tell you, but you had a bias. You were overly confident that you did the research, you had everything done, you looked at everything, and like I tried to tell him, hey, sometimes, squirrel can find, blind squirrel can find a nut, right? But you don't have access to what I have access to. It's a different level of stuff. Okay, I've got the license, you don't. Not to say he can't beat me on diff.
Right.
But this was as glaring
But there have
as can be.
been also studies that have been proven that literally a monkey throwing darts at a board can sometimes have a better investment strategy than somebody consistently trying to buy, trade, and it's
Very
not
true,
worth it.
very true. I tried to save him, Spike. I tried to save him. I said, you want me to go short for you? I'm going to go long. I tried to show he might be able to chicken him out, but he found out.
Right. And well, the stock market is an expensive place to get an education.
Great answer. Yes.
Another one, though, that I really want to bring up right now, especially because of what's going on, because I think it's incredibly relevant, is called recency bias. We have a tendency to remember things that happened more recently, obviously, than things from the past. And when I'm talking about recency bias, let's go back to COVID and the stock market drop back then. Do you think what's happening in the markets right now is like what happened a couple of years ago? Because there's a lot of sentiment, this is just the ups and downs. In fact, there's some amount of recency bias that says, remember 2008? That was terrible. It came back up. Well, that took years.
Yes,
and then they look at 2020 and say, it came back up.
Yes.
Recency bias, how long sometimes can a bear market last?
They can last into the years, and we just don't know. I mean, if you go back to 1929, I hate to even bring that up, but from 29 to 45, we had zero returns back then. If you look at it over a 15-year period, so we don't know if we're into that. No, but like you always say, and I love your analogy, Spike. No one has a crystal ball, but we have to try to plan for these type of events. You asked a very specific question, a very good question. Do I think that we're going to just come back from COVID? I do not. Because look at it so far. Look what we're in. If you looked at the drop of COVID, and folks, if you do schedule an appointment and come to my office, I have a very big poster, nicely framed, of the COVID dip and all the events that led up to it and everything as it drove back up. You're talking a 21-day event that it started to climb back up. So we obviously all know this is not what we're dealing with. Why? Because January 1st of this year, we've seen NASDAQ over 30% loss, S&P 500 over 20%, 25%, Dow's into 18 and 19. So we know we're already incurring these losses on a much longer time frame than just the COVID, right? right?
Yeah.
So
Yeah.
yes, we already know the answer. That's a no.
That's what's worrying me right there. And what brings me to one last one to wrap up the show is called anchoring bias, because what I want folks to do out there is to get your own complimentary review. I know a lot of you out there might be thinking, well, what I'm being told or what I've learned is I'm just going to hold on, or I've already taken 20, 25% in losses. I don't want to sell now. I want to wait. That one is called anchoring bias. And can you talk to the folks out there about anchoring bias and what your review is all about before we leave today?
Well, the anchoring bias, just like you said, Spike, very simply, you're trying to make on subsequent judgments, right, of what has happened. You want to hold it, right? It's not always the best. That's why when you come in, we'll look at your portfolio and we do what? A rebalance. We'll look at the diversification. But folks, when you do come to our office, we ask you to come, be relaxed, come have a cup of coffee with us. If you're close to retirement or in retirement and you just want a second opinion, call the number on the screen. Come see us. Very relaxed atmosphere. And we know you're going to learn something because the complimentary portfolio review gives us a couple of items. First off, we look at your risk. Do you know how much risk is inside of your portfolio? We look at your fees. Fees are very hard to pull out. They're embedded in there, okay? We show you that. We look at it for 2 to 3 minutes. We already know where you are. We give it to you and we say, did you know? And you know what? 90% plus don't know, okay? How diversified are you, folks? Do you really know what that term diversification means? You may be getting told you are diversified. We have all the web programs to let us know exactly how diversified you are. And if you really have the time, I could pull up just one and show you right there on the spot. I can show you that very simply. And we also want you to get an income plan complimentary from us. We'll give that to you. And due to the high demand, unfortunately, for the next 15 callers that call in, we will provide everything I had just told you about. Complimentary, totally complimentary for you. Right, Spike?
That's right. Mark, thank you so much for talking
Welcome.
about behavioral investment biases today. Folks, make sure that you aren't reacting emotionally to what's going in the market. Work with someone who can be objective about your portfolio and help you be and stay retired. Call for your own complimentary review right here, 888-339-2048. We'll be back again with Mark Provenzano and Let's Talk Money next week.